guys, here is a 90 to 100% win rate strategy that have really made me become profitable. I've been using this strategy for almost 3 years plus now, right? And it's something that is very easy that you can also implement and also get the same result, right? I'm Tochi and welcome back to my YouTube channel. So let's head straight to the screen and let me show you this strategy, this amazing strategy.
We are going to be talking on the box trading concept. Now, what does this box trading concept imply? Let me delete everything on the chart. Now, we have different market conditions. We have the ranging market. We have the one that's where the market is consolidating. All right. So we have different market condition. Okay. So now, when market is consolidating or ranging, what do we do? That's where we now implement this box trading concept. Now, I think sometime last 2 years or last year, what was happening was this box trading concepts. It will happen then, boom, like throughout November, December, January. Is it November or it started from October? It was box trading concept that we were using. So what is that? You know that market condition do changes. So we have different market condition. So what if the market starts ranging? How do we trade it? So I make sure that all these things are fixed so that you can trade all market condition. When the market is ranging, you know how to trade. Now let's go to a bigger time frame, maybe 4 hours or 1 hour, and look for where market consolidated, right? Then from there you would know what to do, right? So notice here market consolidated here minorly, market consolidated around year 2, right? All those points where market consolidated year 2, just a minor one here. Okay, what time frame is this? I think okay, this is 4 hours. Just look for points where market was just consolidating and then boom to the upside. Let's use all these ones as an example, all those minor points where market consolidated. So I want to explain how to use that box trading concept. Okay, let's shrink the charts. Although this is clearly an uptrend, but I just want to explain those consolidation points, how to pick them or how to trade them. Should I use 1 hour instead? So we don't need to just be going way back. So yeah, the market consolidated. So in cases like this, you mark out the overall high where the consolidation started from and the overall low. Yeah, the market even faked out with a week and melted back up again in this case around this area. And this is like a bigger time frame, right? This is like a way bigger time frame. Yeah, my market did a minor. Let me go to 1 hour so it will be more easier for us. Let's go to 1 hour. So it will be more easier for us to track those consolidation points, right? It should be more easier for us to track those consolidation points. Yes, that's the market just playing inside these points like crazily. So you see this place might look small, but it's a consolidation level on the smaller time frame. So we draw it from the beginning of the week, the highest week, to the lowest point. Same thing here too. The highest week of that consolidation. Before it was initially it was here, but let's say after a while we know that this market was consolidating to the lowest week, which is this point. That's a consolidation point. Which other level again? Please just follow and pay attention. Yeah, so the market was just ranging like crazily. So the highest week. So one thing is that this was initially the point here. So if it pushes up and melts back inside, you now adjust it to the new week. That's how we do it. We now adjust it to what? The new week. Okay. So that's it. So that's 1. So that's 1. That's 3. This other point again where the market was just ranging sideways. Okay. So I'm just trying to show you example of what ranging market looks like. And now it might not look like it's ranging here. If you go on the smaller time frame, that's when you know that truly it was ranging all around these areas. So how many have I plotted? 3. I think that's 5 total. So let's go to the 15 minutes time frame because those are our entry and confirmation time frame. Okay. So now this is how we trade the box trading concept. When it comes to the box trading concept, we have a fixed pips target. Okay, we have a fixed pip target. Now, this particular point, the market ranged, yeah, you see how choppy it was here. So now what we focus on when market is choppy like that, we mark out the highest point of that consolidation on the time frame to the lowest point. Now we wait for a breakout. Okay, so now this was what the clear breakout here. This was a candle, the good bullish candle. So in cases like this, the minimal risk reward when it comes to box trading concept is 1:2. Now the strategy, this is our strategy. The minimal risk reward is 1:2 also for you to come out profitable. I've not gotten to that. That's why I've not talked on risk reward and all that. Right. So the minimal for this box trading concept is 1:2, which means after this break, your entry should be on the next candle and your stop loss below the candle that broke out. And your target shouldn't go beyond what? 1:2. So that means this trade you would have still been on it when this one, that is, if you would be able to hold this kind of trade, you would have still been on this particular trade even before this second consolidation, and then that one arm broke out also. You get, because clearly this is an uptrend, your even tip will even be more higher. So, but the minimal risk reward, the max for box trading concept is 1:2. So let's go way back. Let's go down. Where market consolidated again, the other of our boxes that we drew. Now this is it also. This at that point where the market was moving sideways. You can see it here. Then all of a sudden, boom, this was the breakout, your stop loss way. Below that candle that broke out, your entry on the next candle, your stop loss below the candle that break out, and your risk reward. What is your risk reward? 1:2, 1:2. Keep it simple, 1:2 for box trading concepts. Now, when we are trading our normal on, if it's from 4 hours zone to the next 4 hours, you can give you 1:5, you can give you 1:6. Some gives you 1:10, some 1:30, right? So, but for box trading concept, it's always fixed, right? So now for this particular one, this was the candle, the bullish candle that the body closed above it, which means your entry should be on this candle that opened and your stop loss way below that candle that broke out, which is this one. And your risk to reward was again 1:2. Okay, so it might not work perfect like this. Just know that there's losses. I'm getting to that particular point. How many have I done so far? How many have I done? Okay, I think it should be the last one. So you see that you were the one, you're watching it with me, you see how we are picking it with you. If we skip anyone, go on the chart, do it yourself. Check how many went in your favor, how many went against you, and you notice that with 1:2, check how much you make. You come out with profit if you pay attention to it. So this is the box trading concept. This is how we trade it when the market consolidates. We pay attention to the wicks. This time around, we don't pay attention to the body, the wicks of the candle.
So guys, that's it for today's video, right? If you really learned something new today, be well to hit the subscribe button, like this video, and share it with those gold traders, those future gold traders. And also, if you need a community or resources that will really help build your trading career, then go straight to the description box and get one of these copy or other gold Bible, and also join the Telegram channel to join the other communities, other fellow traders like you that could help build you. And also, if you want to learn directly from me, the link is still in the description box, right? See you guys on my next video.